Today I am going to share with you a high probability trade setup for the Euro FX futures, backed purely by historical data. So next time it repeats, you know what to expect with a very high probability. If you like it, you might even share it with friends that love to trade the euro. Let's get started. Our focus for today will be on Euro FX futures Thursday regular DR sessions. We are focusing on a specific confirmation time window where we want to have a long confirmation between 10:30 a.m. to 11 a.m. The probabilities which I will share with you will not include any confirmation after that particular time window. Once the confirmation happens during that specific time window, we are dealing with 200 datasets in total where this unfolded over the past 17 years. The first thing to note is that once we get a long confirmation in that time window, the DR session held true 78% of the time in the past. Because we assume that the DR session holds true, we will check the true box and QuantX will only show historical data for true scenarios. After that, we want to identify the optimal time, retracement or price areas, and lastly, a high probability target for the session. For the optimal entry time window, we will be focusing on the first mode from the left of the distribution up until the median time of max retracements. The median time of 12:30 p.m. marks the time where historically 50% of maximum retracements during the session happened. Most of the maximum retracements happened especially between 10:30 to 11:15 a.m. This is also important to note. The mode up until the median time is therefore the time window we want to look for high probability entries. Now that we identified a strict time window for entries, we can bring that onto our chart. This means everything after 12:30 p.m. is not of interest for our time and price-based trading, and no entries should be taken after. Before we move on to the retracement areas, it is important to know the statistics for a retracement back into the defining range as well. While there is an 82.5% probability to see a retracement back into the defining range, the probability of seeing a retracement back into the implied defining range is slightly lower with 70%. This already tells us that price sometimes likes to just retrace back into the defining range instead of deeper into the implied defining range before making its move. But what exact advantage does this give us? When looking at the maximum retracement distribution, which is measured in standard deviations, we can clearly see where the algo made its maximum retracements in the past under these criteria. It is a very nice distribution, as the bulk of retracements happen specifically from plus 0.19 to minus 0.2 in the entry time window from 10:30 a.m. to 12:30 p.m. This area also covers the median and 70th percentile of max retracements. After that, there's a sharp decline in the distribution, and if the DR session held true until its end, there were no maximum retracements lower than minus 0.6. So when we bring this information onto our chart, the retracement area we anticipate for a high probability entry looks like this. Do you get why the statistics of a retracement back into the defining and implied defining range are important now? Many times, price made its extension to the upside by only retracing into the defining range instead of deeper into the implied defining range. But where did price made its extension higher most of the time or with a high probability? Let's see what we can expect as a target for the session under these criteria. The max extension distribution has 4 modes standing out. 2 of them are located between the 70th percentile and the median. But since we defined a clear entry time window and just one retracement zone, we can get great insights what price did exactly when making a retracement into our defined area. By cross-filtering, we get way better insights for targets. We can now see that the 1 to 1.09 standard deviation stands out in the target distribution by lining up with the 70th percentile, and often price reached even 1.3 to 1.5 standard deviations or even higher. I think the 1 to 1.09 standard deviation level is a good to go target. With time, price and a target area now on our chart, let me show you something very interesting and how to maximize profits with that information even further. Depending on your entry, this setup can offer 3R or even more. But if the confirmation candle is higher and price retraces just slightly into the retracement area during the entry time and continues higher, you'd get only a potential of 2R for a trade. Since we know that there's an 82.5% probability that price will retrace back into the defining range and a slightly lower probability to see price retrace back into the implied defining range, which sits at 70%, we can think about dividing the whole retracement area into two. The first retracement area would cover the high probability area going from plus 0.19 to the zero level, which is the beginning of the implied defining range. The other one would then be considered from minus 0.01 to minus 0.2 and cover the retracement probability of going back into the implied defining range, which sits at 70%. So instead of entering, for example, like this and covering the full retracement box, you can split it into one bullet outside the implied defining range with stops just 1 or 2 ticks below for a potential 4.4R. If stopped out, you can go for your second bullet for the session in the high probability retracement area inside the implied defining range. Even though you were stopped out on the first position taken outside the IDR, you would have ended the session positive by entering a second high probability trade inside the optimal time and price entry window. Interesting, right? Let's look at a few other examples quickly. Thursday's regular DR session from the 26th December 2024. Your first entry outside the implied defining range in the first time and price retracement area would have been stopped out, but with the second one and your stop loss 2 ticks below the minus 0.2 would have given you 5.5R, making it a total of 4.5R for the day. Thursday's regular DR session from the 7th November 2024. Entry after the close of the first candle after confirmation would have resulted in a 1R loss, and the DR session didn't held true, confirming a false session. Thursday's regular DR session from the 8th August 2024. Your first entry outside the implied defining range in the first time and price retracement area would have been stopped out, but with the second one and your stop loss 2 ticks below the minus 0.2 would have given you 5R, making it a total of 4R for the day. Thursday's regular DR session from the 25th July 2024. Entry after the close of the first candle after confirmation outside the implied defining range would have resulted in a plus 4.7R trade. Let me summarize it once more. You only want to use this approach on the Euro FX futures, only in Thursday's regular DR session, if a long confirmation happens between 10:30 a.m. to 11 a.m. Confirmations after that time window have different probabilities. You highlight the specific entry time window going from 10:30 a.m. to 12:30 p.m. No entries should be taken after 12:30 p.m. Inside that time window, you look for an entry anywhere between plus 0.19 to minus 0.2. As I've shown you, you divide this retracement box into one above the implied defining range and one inside the implied defining range. The first retracement area should go from plus 0.19 to 0 with stops 1 to 2 ticks below if entered from there. The second retracement area is from minus 0.01 to minus 0.2 with stops 2 ticks below it. Your target for the session is the 1 to 1.09 standard deviation level. Now, go onto your chart and backtest it coupled with all the DR basics that I've taught you so far on my channel. If you found this session insightful, please like the video and share it with your friends who trade the euro. Also let me know in the comments which assets you trade. I might drop more high probability setups for other instruments, and I hope to see you in the next video. We're gonna take on the world.